morning, everyone. Welcome to our newest webinar, New Payroll CFDI, Tax, Labor Act, and Labor Aspects. My name is Cynthia Yanez, and I will be here for this webinar, which is scheduled for 1 hour and a brief section for question and answer at the end of this talk. Thank you very much for joining us today. And I hope this webinar is useful for you. Please feel free to send us our question through the course of this webinar. However, please bear in mind that we will be taking the time to answer each of your questions at the end of this webinar, and in case time is not enough, we will be sending the answer to your personal email directly. So now we're going to start with this webinar, and we always like to start with a little bit of background just so everyone understands why this subject is important. So let's start clarifying what is a CFDI. Well, a CFDI is an Internet Tax Digital Receipt, coded CFDI in Spanish, and is a document or valid tax receipt before the authorities that allows to prove income, expenses, ownership, and should be prepared in an XML format. In other words, the CFDI is what we used to know as a tax invoice. This is nowadays the valid document in Mexico. And what is this CFDI? It has 4 essential characteristics that make it valid. That's why the authorities decided to move from pre-printed forms back in 2010 to electronic invoicing, because this document is able to demonstrate the integrity or the identification of the vendor and the client. Also, is important because it's able to prove authenticity. It's going to, whenever you're going to try to prepare or issue a CFDI, it is going to require the electronic signature of the company, which is specific to each entity, and also a digital seal for invoicing, which is another requirement to prepare the invoicing. So it will be very clear who is the recipient of the revenues on each CFDI. Also, it has the important characteristic of being unique. Each CFDI is granted a tax ID number, which is a 36-digit number that makes each and every one unique. And also, it is verifiable. The tax authorities have released tools to verify that a CFDI that you receive complies with every tax requirement to verify that it will support your deduction. So, as I was mentioning, in the past, Mexico used to be very paper-based. Now we are going to have everything being electronic. And it started back in 2010, where we had a few types of taxpayers who were obligated to enter into the digital invoicing scheme. Then it was a trial period, and in 2012 it was mandatory for every Mexican taxpayers to make electronic invoicing. That means CFDI. Now there have been more modifications. So in 2014 is the first time that we are being obligated to have a CFDI for payroll. So this is a little bit of background, and a CFDI, as I mentioned, is or invoice that will serve as support documentation for every type of transaction that we want to support. So the CFDI and what we are going to hear from now on has two representations. One is the XML and the other is the PDF. So a CFDI or invoice, it's going to be seen in two different manners. The XML file, which is what contains the structure provided by the tax authority and the technical requirements so it can be read by the tax authority system. And it is the XML file, the one that supports deduction. Then the other version will be the PDF, which is just an eye-friendly version so everyone can print and understand. But it does not support a tax deduction or a payment or any other thing. It's important to make sure that we always keep the XML. Now, in these XMLs or CFDIs or invoices, which is the same thing, later on the authority included what is called a complement for a CFDI. And a complement is a note or label that it's going to be attached to the CFDI, whereby through complements, additional information it's going to be included. So it's an addition to the CFDI that the authority, depending on what type of activity or what type of transaction is being performed, they might require additional information. As of this moment, we have 24 available complements. For example, the one that we are reviewing right now, which is for payroll, and there are complements for payments made, for commerce transactions, and different things that the authority, they want to see additional information. So depending on what type of transaction, we might be required to include a complement to our CFDI. So when is the use of a complement mandatory? The complements, of course, they need to be published on the tax authority's website. So once they're published, we have a time frame of 30 calendar days in order for those complements to be mandatory, unless there is a provision extending the time frame. So now that was a little bit of background of the CFDI in general, which will support, as mentioned, income, deduction, payroll. Now, the authorities are also requiring CFDI for taxes, for Social Security. So the trend is now to have everything through a payroll. Is now the way that the authorities want to receive information. So moving on to background for payroll, we have on the income tax law as a requirement for a deduction that payments that are considered revenues for the employees and those incorporated to salaries may be deducted if they are evidenced on the CFDI, which means that if we want to make the deduction of the salaries that we paid, we have to make a CFDI with the complement for payroll. We also are obligated to issue and deliver the CFDI on the date that the expense is made, which may be used for proof or a payment received for purposes of labor registration. Here, it is important because it is the first time that we are having the CFDI for payroll being linked to the labor law, because in the past, you probably remember there was no obligation for CFDI for payroll, and the only document that was needed was the printed receipt that we will deliver to each one of our employers. Nowadays, we are going to see that this CFDI will also support us whenever we have a labor situation. Now, in regards with the issuance of the payroll CFDI, this has to be issued when salaries and personal subordinated services are paid, and it shall be included the complement for the payroll. So that means we have to make the CFDI, but also include the special complement that the authority has required whenever there's the payment of salaries. So now, when do we have to prepare and issue the CFDI? According to the income tax law, the date of issuance and delivery to the employee should be when the payment is actually made. That is, if you have bi-weekly payroll, you have to issue the CFDI on the 15th or on the last day of every month. For example, if you have weekly payments, you have to make a CFDI to each one of your employees every week. So this is according to the general rule. However, on miscellaneous regulations, the authority released an option, which is that you can issue the CFDI before making the corresponding payments. Let's say if you're going to make a payment at the end of the month, you can anticipate and make the CFDI 1 or 2 days prior to actually making the payment. And also there is an option that you can prepare the CFDI within the term that the authority has allowed, depending the number of employees that the company has. And that is, I'm going to show you a quick chart. Let's say that you have 1 through 50 employees, okay? You have 3 business days after the payment date to issue the CFDI. If you made the payment on the 15th, that means you have 3 business days to prepare the CFDI for such payment cycle. And these additional days go on. If you have 51 to 100 employees, you have 5 business days. And companies with over 500 employees, they have 11 business days after the date of payment to prepare and issue the CFDI. However, in our experience, this option is not very practical because, as you can see, it could be the case that preparing the CFDI could overlap with the next payment cycle. So personally, we prefer to issue the CFDI every time there is a payment of payroll. Also, it creates additional administrative work to making sure that the payroll that was paid has already been issued the CFDI. So just take into consideration that there is this option for additional days, but in our experience, it has been more practical to issue at the same time that the payroll is made. Any regulations that if the payments for payroll are in a frequency less than 1 month, a single monthly CFDI may be issued to each worker. So that is, if you have weekly payments, you usually will have 4 payments within a month. In this case, instead of issuing 4 CFDIs, you have the option to prepare one monthly CFDI to each one of your employees. In this case, you can also apply the chart that we just saw, and you can use the additional days depending on the number of employees that the company has. This also, in our experience, is not very practical because it says taxpayers choosing to issue a monthly CFDI shall include a complement for each of the payments made during the month. And the CFDI must include as many complements as number of payments carried out during the corresponding month. So what this means is that you can still have one CFDI, but as I mentioned, the complements can be attached to the CFDI. So if you're doing weekly payments, you need to attach for complements. So this means that the level of information is still the same. You're just postponing it, and it might be more intricate to do one CFDI with 4 complements rather than 4 CFDIs at the moment of each payroll. Also, there might be other complications, which means that you have to set up your payroll system to be able to attach different number of complements. So it might incur in additional cost or administrative work. So that's why in our experience, we have not seen this as very practical. In case you wanna use a monthly CFDI, you will have to keep this option for the entire fiscal year. Or if you already started using a single CFDI per payment, you have to continue using this methodology during the year. You can vary this option on January 1st of the following year, but still have to complete the whole year using the same option. Now, up to this moment, we have been talking about issuing the CFDI, which of course is one of the requirements for deduction, because if you don't issue CFDI, this document will not exist. But another important requirement is the actual delivery of the payroll CFDI to each one of your employees. So here also we have on the miscellaneous regulations that taxpayers will deliver or send to their employees the electronic XML form for the salaries that were paid. So at the beginning, we saw on the income tax law the obligation to issue and deliver. Now we're being reminded of this on the miscellaneous regulations. However, taxpayers who are unable to comply with delivering the XML file to the employees, there is the option that they can submit a printed CFDI containing the following information, which is the tax number, which is the 36-digit that I mentioned, that it proves that each CFDI is unique. It also has to include the employer tax ID and the employee tax ID. Why the authority is making this type of benefit to taxpayers is because, as we have mentioned, the XML is an electronic document, and there might be cases in which not everyone have access to our email address or to an USB, so it's not possible to actually deliver the XML file, which is electronic. So they have made this benefit that you can provide the printed form or the PDF version that we just talked about. Now, as I was mentioning also that it is important to deliver the CFDI either in its XML or printed version, because in the past, for labor purposes, we used to have the payroll receipt, which we still use every day. But now we have seen that it incurred, it's been more used, the electronic XML as a proof of payment. So now each time and more it's being stronger, the use of the XML. Now there is another option which a few companies have decided, and it actually makes it more easier to comply with the requirement of delivery of the payroll. And it says that taxpayers who make a website or email address available to their employees with the purpose of delivering the CFDI are considered to be in compliance with the delivery of the XML. So this means that, okay, if you don't want to go into the hazard of having a line of your employees to pick up their XML, you can set up a website of email address where they can log on and have access to their payroll receipt in XML version. That should be good in order to comply with the requirements. However, what we have also seen as a measure for this type of option is to include on the labor agreement or on the labor contract when you hire the employee, at that time you include the website or email address in which they shall receive their XML, so that it's more clear that they are in awareness of this option and that they are sure that they are receiving the XML. Now, as we have seen, we also have options with the delivery of the payroll receipt. And some other taxpayers may have, okay, the website or email address that we just talked about. However, if you still cannot comply with this, you may deliver semi-annual printed representations of the CFDI during the month immediately after each semester. This means, okay, you comply with issuing your CFDI every time you make a payment to your employees. For some reason, you cannot deliver the XML, you cannot have a website, you cannot send it to their email address. Okay, you have the option of every 6 months deliver all the copies of the printed forms of the CFDI to each one of your employees. However, in order to have this option, it is important that each CFDI has been issued during the time frame that was established. So, as of this moment, we have seen the obligation to issue CFDI as well as the obligation to deliver to the employees the CFDI. Both of them are requirements for deduction, so I will try to sum up what we have seen up to now. In regards with the XML for payroll, we have seen that we need to include complements when each time that we make a payment, or there is the option to prepare an XML in a monthly basis, including as many complements as payments were made during the month. We have the option of preparing the XML each time there is a payment, or including the additional days, which can go through 3 up to 11 days depending on the level of employees that the company has. In regards with the delivery of the XML, we can deliver the XML at the moment of the payment. We also can deliver a printed version with 3 requirements, which were the tax number of the CFDI, tax ID for the employer and for the employee. Or we can make available the XMLs through a website, through email, or through a kiosk. Or we can have the delivery of the printed version every 6 months. So these are the options that we have in regards with complying with these requirements of delivery and issue the CFDI. Now, as we are going more into the topic of this webinar, the reason why we wanted to bring this to the table is because there has been a new version of the complement for payroll, which is version 1.2. Now, as I explained at the beginning, for payroll, we were first obligated to use the complement on January 1st, 2014. And is still current as of today. However, it will expire on December 36, 2016, when the version 1.2 will enter into force. Right now, we have been using the version 1.1, which is the first one. There was never a 1.0 version. So, of course, there can be some cases in which you're making payments that's in January 2017 that still correspond to December. So the authority has mentioned that will be a time frame in which both versions are valid. But in the end, let's say third or fourth week of 2017, the version 1.2 will expire. So now, as I mentioned, the complements are mandatory to use 30 days after they have been released at the authority's website. Now, version 1.2 was early released on September 29, 2016. So if we go to that regulation, we will be obligated to use version 1.2 right by now. However, the actual rule says that it will start or be mandatory as of January 1st, 2017. But the reason that the authority is releasing it early is for service providers to be ready. They understand that there is a series of technical modifications, and all these will take effort from the service provider, so they are releasing it with anticipation so they can be ready. Now, why the authorities are having a 1.2 version? Okay, for instance, they're going to eliminate the Exhibit 1, which is an informative return for wages and salaries. All companies paying wages and salaries, they're obligated to file each February 15, you probably are very familiar with this, the informative return that is also a requirement for deduction. So that return, it's going to be eliminated starting January 1st, 2017. Now, this version 1.2 will allow the identification of the recipient's tax ID. And the authorities have mentioned through several forums that right now CFDIs for payroll are including a lot of tax IDs that do not even exist. So this version, it's going to provide a validation method. Also, some elements for validation and to avoid errors are being included. For example, we're going to see new fields for total of income, total of deductions, because in the past there were no validation items, so the companies will prepare CFDIs that will not match to the amount that was paid. Now we're going to go into the structure of the payroll companies, payroll complement. Now, the version 1.2 includes 77 fields that need to be filled out each time that you make a CFDI for payroll. Version 1.1 included 40 fields. So we're going to see 37 new fields in the newest version. Now, in the version 1.2, the information has been regrouped into 7 different nodes, which are the ones that we can see here. So it means that the type of information has been classified. So in version 1.1, everything was all together. Now, these 7 different nodes are general, which is related to payroll. We're going to have a node specific for the issuer or the employer, the recipient, one node for income, one node for deduction, for other type of payments, and for disabilities. Now, as I was just mentioning, the exhibit 1 for wages and salaries, will be eliminated as of 2017. However, we still have to comply on February 15, 2017 regarding the salaries and wages that were paid during 2016. So this coming return in February 2017 is the last one that we're going to be filing for wages and salaries. Starting January 1st, 2017, all the information that the authority wants regarding salaries or wages, it's going to be received through the CFDI. Another list specifying which taxpayers shall fill out the subcontracting fields, because we're going to see in later on that subcontracting is another feature that was added to this type of CFDI. Now, regarding the node of income, we have 15 new fields. For example, we have total salaries, total severance, indemnification, retirement. These 3 are for validation. This also shall be automated. They are included two fields for stock options. In case a company is offering options to the employees, they will request the market value and the price of the share when it was granted to the employee. Then we have a special section for retirement payments. Usually when an employee is retiring, there is a special calculation, so they are going to request specific information about this type of payment. Same case with severance indemnification. They are going to request specific information about this type of payments. Now, there is new items in the deduction notes, which are also for validation, which is total other deduction, and total of withheld taxes. So this is actually information that the authority is going to receive, and very easily they will be able to match to our tax installments for withholdings to the employees. And then we have data for other payments, and we have eight new fields. For example, type of other payments we're going to see later on. And here we have key as the authorities are including it, but in reality what it is that is the accounting number that the employer uses in the accounting to code revenues, to code deductions, to code everything included in the CFDI. So this key is allowed to be 3 to 15 digits, and it should match with what we have in our accounting. Some companies will face the situation in which your share of accounts, each account is more than 15 digits. So if that is the case, then the authorities have mentioned that you should only include the first 15 digits of each of your accounts. Then we have a concept, which is the description of the payments. We are going to see in a few moments that the authority has released catalogs. So all this information should be included according to each catalog. We'll see that in a moment. They are also including if the employee has any balance in favor that has been applied, the remainder of the balance in favor, and if there is any stimulus that is granted to the employee. Now, as I was mentioning, on October 5th, the tax authorities published an Excel file containing all the catalogs to be used in the complement for the CFDI for payroll. Now, in total, there are 15 catalogs. 9 of them are new, 3 of them already existed but were amended, and 3 remain the same as in version 1.1. So here is a list of each catalog that we are going to review individually. For example, we have payroll type, which is new. The source of the fund, which is going to be for government, is also new. The type of agreement under which the employee has been contracted, and so on. These are the 15 catalogs, and we're going to use them for the specific codes that they include. If you include information that is not from the catalog, the CFDI will be invalid. That's why it is important that those catalogs are taken into consideration. And here we're going to see a few examples of what is included in each payroll type, which is new. We have regular or special payroll. Here is, for example, we're going to use O which is for ordinary or regular payroll. Whenever we're going to pay fixed salary. This will mean the regular payroll that we pay on a bi-weekly basis, on a weekly basis, it's the amount that it's fixed each time. However, a special payroll will be indicate on the CFDI which type of payroll we're paying. There can be the case that, for example, in December, companies decide to include the Christmas bonus within the first payroll for December. In that case, the authority has established that you should include O for regular payroll, even though it is including the Christmas bonus, which will be a special payroll. If you're paying separately your regular payroll and the Christmas bonus, then the Christmas bonus will be with an E for extraordinary or special payroll. Now, the source of the fund, which is new, as we mentioned, this has a couple of choices in the catalog, depending if the government institutions are paying with its own income, with federal income, etc. But this will be applicable only for government institution. Then we have contract type, which is also a new catalog. Here, the options that we have is O1 if you have contract for undefined period, O2 if it is for a determined project, and so on. And we see that at the bottom we have a 99 for other type of contract. There is a list of options, but if your specific type of relationship with the employee is not included there, you can go to 99 other contract. For example, you can have seasonal employees, you can have a trial employees, and so on. Those are included on the catalog. Also, just as a comment, there might be the case that you don't have an agreement or you don't have a contract with your employees. In that case, the labor law establishes that whenever there is not an agreement, it is understood as an undefined period of time contract. So just take that into consideration. Then we have the next catalog, which is for work day. This is a new catalog, and here we can we are going to indicate the type of work or journal that the employees do. It can be O1 for day, O2 for 9. There is an option for hourly work, for shifts, etc. If the options in the catalog do not fit to what the employee performed, then you can have 99 for other work day. Also, the authorities have included or have made very clear that this catalog shall not be used to persons that are assimilated to salaries. Now we have the catalog for payment type. This is one that already existed but has been amended, and the regime type is how the employee has been contracted by the employer. For example, here we have O2 salaries, O3 if you're making retirement payments, and this is where we have the code O9 for assimilated to salary payments, which is a specific type of employees. Here we also have the option if the options do not fit the type, how the employee was contracted, we can go to 99 other regimes. Then we have the position risk, which is a field that remained the same. This did not have any modification. However, it's important to clarify that even though it's called position risk, is actually the risk depending on the employer activity. It makes no differences if it's a person, let's say it's a construction company. it is no difference if it's the secretary or if it's actually the constructor that is working. This position risk is from class 1, 2, 3 through 5, depending on the activity of the employer and according to what has been registered at the Social Security institution. It means it should be the same type of risk for all the employers in one company. Then we have a payment periodicity, which is another new catalog, and it's to specify the frequency of the payroll. It can be daily, weekly, 14 days, and you can also have the option for 99 other frequency. Then we have the bank catalog, which this remained without changes and is just to specify the bank institution at which you are making the payment for salaries. Then we have income type, which this is an amended catalog, and it is including 001 for wages, salaries, 002 for annual gratifications or Christmas bonus. So here we're going to have the option for each type of payment depending on what we are paying to the employees. It is important to mention that you can include as many income types as you're paying in a payroll cycle. For example, can be wages, can be vacation premium, can be bonuses. It's important to separate each one of the payment types. Then we have the hours type catalog, which is another that is new, 01 for double, 02 for triple, depending on the amount of the type of extra hours that the employer has worked. Then we have deduction type, which has been amended to indicate that type of deduction can be 001 for Social Security, 002 for income tax. So in this case also, it is important to specify each one of the deductions. Also, the deduction type, it's going to have an option in the catalog, including disabilities. In case the employee is going through a disability, we should indicate that type of payment. Now we have another new catalog, which is type of other payments. And here, this is actually very important because it will allow us to make a repayment or income tax that has been withheld in excess. So that is in case by mistake you withheld more to your employee. It's going to allow us to make an CFDI for travel expenses. Here you can see 003 for travel expenses. So each time that we pay a travel expense to our employees, we're going to have to issue a CFDI specifying other type of payment for travel expenses. Now we have the other one, which is type of disability. This remains the same and is basically just to explain a labor risk, general disease, maternity, etc. Then the tax regime, which is new, and this is depending on the employer activity. Even though the employer is an individual tax person or a company, this is just to specify the tax regime under which the employer is paying taxes. And finally, we have the estate, which is new, This is a catalog that's international. It includes all the states in Mexico, and as you can see, we have TX, that stands for Texas in the US. We have a very wide list of places in which the employee can be rendering the services. These are international catalogs for states. Now, we have basically gone through all the details and new information that is being required on this new complement 1.2 version for the CFDI. But we want to make quick comparisons between versions 1.1 and versions 1.2. So the main differences is that there are more nodes or more fields added to the version 1.2. We saw that the version 1.1 required 40 fields. Now version 1.2 is included 77 fields. Some nodes now have more added attributes. That means that they request more information, such as the one that we saw, type of contract, type of extra hours that you're paying, etc. The information has been regrouped in different nodes. That is just for identification of information. Everything now seems to be more organized within the complement. There were some corrections made regarding taxable and exempt concepts. For example, version 1.1 included taxable deductions, exempt deductions. There is no such thing. Deductions, they go towards the gross amount, so there's no such thing as taxable or exempt deduction. So they made a couple of corrections there. Now, another one of the changes is that in version 1.1, we only have required or optional field. Now, if we have in version 1.1 a required field, you have to complete it. But if you had an optional field, you just can leave the spacing blank and there was no problem. But here they're adding a conditional type of field in which, let me try to explain, this type of field will be mandatory whenever you fall into the situation. For example, the attribute exchange rate is conditional, but if the currency is different to Mexican pesos or Mexican currency, then this item will become mandatory. Another example is if in type of payment you are including severance type of payment, then another items will become mandatory, such as elderly premium that was paid, and so on. So it is very important to make sure that when there is a conditional field, we really need to make sure if this conditional should be in blank or should be mandatory if we already fill something that's a prerequisite for this. Now, as part of the background that we saw, we dedicated to review additional information that were not being validated in version 1. So now the service providers, by using this 1.2 complement, they're going to have to validate that the version 3.2 of the CFDI and the 1.2 for complement it's being used. These are just general things that they are going to validate. in method of payment, they need to verify that does not include or does not apply is included. The certificate number, they'll need to verify that it's an expense type of receipt because you're making a payment. Verify that it contains the tax regime of the employer and that the recipient field is not include an address field. Also, another thing that they are going to validate is the recipient's tax ID shall be registered before the tax authority. This is a very important new characteristic of 1.2 version, is that if by some reason or by any mistake the employee provides an incorrect tax ID, then the CFDI is not going to be able to be issued because the service provider will run a process to verify that the tax ID actually exists. And this is to avoid bad practices of including payments to persons that do not even exist. Now, also, they're going to make validations that the fields, that all the subtotal fields must be equal to the total income plus total other payments. As mentioned before, version 1.1 did not include this type of validation, so it was very likely to make mistakes. So in general, the service provider will have to validate node attributes and every other underlying elements that are required, such as the conditional. Another considerations that we have to make is what I just mentioned, is that we have to use the accounting key or the account that goes into our chart of accounts for salaries, for vacations, for Christmas bonus. So it says that each employer will include the internally assigned number in its accounting to each type of payment made to the employees. It should consist in 3 through 15 characters. We believe that most of the companies will have an accounts that will fit into that, but in case that your accounts exceed 15 characters, you just have to include the first 15 spaces. Some of the other considerations: tax ID of the employer of the sounds or of the source. In case of trustee institutions making pension and retirement payments handled through a trust, the former employer's tax ID must be mentioned. This is in case pension payments, and is just to indicate the former employers. So it is not understood that the trustee is the employer of such persons. Another consideration is that the tax ID of the person or company subcontracting personnel without being the employer. This only applies to the issuer rendering subcontracting services. As mentioned, the authority is going after the subcontracting companies. So it has been said that they will release a list of companies that have to comply with these requirements. If so, when by that list is published, in case you have a subcontracting structure, you have to review if your company's tax ID is within that list, and then you'll be obligated to comply with this. Otherwise, you do not need to fill out these fields. So, as preventive measures, the authority has provided some tools to validate that tax IDs are registered in the taxpayers database. There is a tool to review individually each tax ID, or a tool to review a massive tax ID of to 5,000 registries. So whenever you're paying to, or whenever you're hiring an employee, it's a good measure to request their tax ID and validate it through one of these tools, just to make sure that you won't have any issues while preparing your CFDI. Also, the tax authority will publish the list of service providers that already are up to date with all of these changes. So, in case your service provider did not make the necessary changes, you can find the list that of validated service providers. And another preventive measure can be, well, to assure that your system to calculate payroll is ready to generate the new CFDI. Well, in order to make sure that this version 1.2 enters into force effectively on January 1st, they have released a ton of information. For example, there is a completion guide, which is an additional document is to assist in the filling out of the payroll complement. It's a 51 pages document, and this is actually what we based on this webinar. When I was explaining the catalogs and the new notes, we reviewed this document. However, you can find it. It's in Spanish on this link. There is questions and answers that concentrate the most frequent questions that the authority has received through this process, and it can also be found online. And also, number 3, there are cases that the authority is already being reviewed. So they are making it public for the taxpayers. So they, before making another question or trying to contact them, they're making it public so you can review. If you fall into one of these very specific cases, the authorities already have provided a question. So now we are going to have a very brief time to answer quick questions or comments. If you have one, please send them through the chat of this webinar. We'll be glad to answer through your email. So this has been it for today. We have glad that you have joined us through this webinar. We remind you that please feel free to send any questions that you have. Here you can have my email directly. I'll be glad to be helping you with any doubt that you may have with this new complement for the CFDI payroll that will be entering into force as of January 1st, 2017. So make sure that you communicate with your service provider to make sure that they will be up to with these changes. Thank you very much for your time. It was a pleasure.